And welcome back, everyone. Cuthbert Langely in for Nick Bears, joined with Dr. Friday. We are talking taxes this morning. We've gotten lots of great questions, everything from scams to handling gifts when parents are leaving homes to you. We've gotten a lot, kind of the full gamut of questions this morning, I would say. So if you are sitting at home and we haven't touched on a topic that you are interested about, give us a call, 737-7587. Right now, Joe joins us this morning. Good morning, Joe. What's your question?
Good morning. Question is, someone was divorced in 2009, but they kept their name they were using instead of changing their name. And of course, they're filing as single now. Is there any problem with that?
Great question.
Yeah, it is. And no, I mean, it was their name, and I know having a lot of girlfriends that have been married and divorced a few times, you can sometimes they refuse to give up the name of their ex or whatever. But that being said, no, from the IRS, as long as they've changed it when during the time when they were married, there's no reason for you to have to give up that particular name. It's still yours, even though you're no longer married to that person. Okay,
great question. Divorce always gets very interesting when it comes to taxes and all that, I'm sure.
Fascinating. I've never been married, but I will tell you, it's not basically the best thing to do. Taxes are not friendly divorce.
Right here,
exactly.
Right?
Well, if you listen to my radio show, you know I always tell you marriage is not for tax purposes, people.
It's complicated.
It does. It gets very complicated because divorce is just messy all the way, and then you can really mess it up with the whole.
Yeah, divorce makes it interesting, I'm sure.
I'm trying to be nice around here.
You're being politically correct.
I was trying to be, somewhat, which is not my normal personality.
Right.
Okay.
We're making it work. So there are a lot of times, I was noticing this when I was online, tax credits. Anytime, you're filing.
Tax
yeah,
credits.
those are the best things.
Yes, dollar for dollar. When you hear credit, we want to go for that versus deduction, because credit means dollar for dollar. So like the child tax credit, you get $1,000 basically right on your tax return, where you have the, exemption for each individual, which is a deduction, which is not dollar for dollar. So, there's a lot of credits out there. The hard thing to do right now is the fact that the tax laws right now are not being renewed for any long periods of time. So at the end of each year, so theoretically at this moment, at the end of 2014, on December 31st, even though they passed the law on December 16th, they expired on the 31st of December. So we have about 50 different tax things that we kind of like, sales tax being one in the state of Tennessee. Since we don't have the income tax, we're allowed to take a sales tax. And depreciation, right now is $25,000. We really prefer it to be about $250,000 for small businesses so that they can write off all of their equipment and things like that. So you basically want to be able to do this, and we did actually. I actually went and talked to the Senate and those. We were talking to a lot of them, and basically they're saying we're trying to get extensions for more than 1 year. They're not succeeding yet, and they said that we're not going to see anything till the end of this year. So hopefully, I mean, and not the greatest answer, but hopefully they're going to give us a couple years, because in our business, in the tax business, we really like to project 5 years out, especially for business and things, because buying a piece of equipment today has to be able to generate income. It's not just for the purpose of tax deduction. And if you can't project that you're going to be able to do certain things with tax credits and things like that, you have to start making bigger estimated payments. So it can be a bit nerve-wracking on that. So, but there are some wonderful credits, and that's why you want to look at your taxes now in this last quarter. We're getting close to the last quarter here, versus waiting to the first of the year, because there may be a few things individually you can do, maximizing 401ks, doing things like this that will bring you in just a little bit smaller, lower income, so that you really make a huge difference on your tax deductions.
If you're married but filing separately, who claims the child?
Either one can claim the child, but remember, again, depending on your income bracket, you can be penalized. You're not going to get to claim your student loan interest if you're married filing separately. You're not going to be able to get earned income credit. You're itemizing. If one person itemized, the other person has to itemize, which may mean they may not even get as much as the standard deduction. So there's just be careful when you make that choice. Many times we'll do it both ways for clients to find out which one is the best. But married filing separately can be a wonderful shield, but it may cost you, just as any kind of insurance, I guess you would say, to do it. So just, be smart, and maybe reasons you want to do it, but it may cost you a few extra dollars to achieve it.
Great advice. Angela joins us right now. Good morning, Angela. What's your question?
Good morning. We have not visited our W-4 in several years because my husband's been in a stable job, but things have changed, and so we are now filling out a new W-4. And for a family of 4 with an income of around $60,000, what is the best to put on line 5?
Great question.
It is a great question. I'm assuming when she says that that's going to be all the husband's income, not hers and his. So I would say you could easily go you know, married, check off the married box, and go married in 3. I usually go 1 shy. I'd rather have too much money and have some coming back. He can revisit that in 6 months or whatever. And I would suggest, even though a lot of changes don't happen, visiting your W-4. I love the way she said, we haven't visited our W-4. But, you know, checking in with your W-4 from time to time, because that is, especially if something changes. But I would go married in 3 for the last whatever few months as soon as you file your taxes this year, and I'm assuming he was probably claiming married in 4 on his past job. I didn't ask, but making that assumption, if he was getting a refund, the income was about the same, go with married in 4. You're right at that breaking point, because you're going to be able to make, was it 12 plus 20? You're going to be able to make the first $25,000 is tax-free for that family at least. So their tax is going to be in the 10% bracket. So they're pretty low.
Oh, that's good to know.
Yeah.
And people talk about this a lot. How much, all your documents, you know, year after year when you file your taxes, how long are you supposed to keep all that? Because you've heard different years.
Yeah.
But what's the answer?
So the IRS will really only go back usually 3 years.
Okay.
But you're supposed to keep 7 years worth of back work because they can go. Now, the wonderful thing is nowadays with modern technology, as simple as using our cell phones, taking pictures, now you can turn those pictures into PDF and you can file those away. You only have to have a photo or a copy of the bills. So scan them in, photocopy them in, whatever, so that way you don't have 15 boxes sitting around the house because I have to save every document. You know, scan it in. I would also back it up off-site onto someplace. You don't have to use the cloud. I had a policeman tell me how scary the cloud is. I don't know, but there are a lot of off-site secured places. I would not just keep it on the hard drive or even in a thing unless you have a fireproof safe. Okay. Just something you can go back to, but you'd be amazed. More people can find paperwork that way than when I say, can you go back 4 years and get me your bank statements? Unless the bank gives it to them, they can't find them, you know? Really quick, sorry, just really quick, because bank statements, individuals have a tendency not to make copies. They go in the bank, they reconcile, or they look at the statement, they don't print them out. Right. Banks will only usually go back, some banks are great, maybe 2 years, but about 16 months. But when you're audited, we're usually going 2 or 3 months back, or 2 or 3. Make sure you copy those out, because even individuals have to have copies of bank statements. Yeah, that is great advice that I did not know. You're teaching me so much this morning. I'm going to be the tax. I'm going to be the tax expert. There you go. We'll next time. Yeah, right. Well, Angela is actually back. She has more, so that great.
Helps
She's
us
going to add to it.
Welcome back, Angela.
Thank you. Sorry, I have one more question. We are also now going to be having to pay for our health insurance. Can we pay for health insurance out of a health savings account, or does health insurance come out after taxes?
That's great.
Well, it comes out after taxes, but you're going to have a lower dollar amount because it's going to be a high deductible. And I would definitely suggest, I don't sell insurance or anything, but from my personal experience and a lot of talking, as you see, I do a lot of that. And HSA is your best plan, because then you're not having to worry about itemizing and meeting 10% of your adjusted gross income to get $1 worth. Everything comes out before taxes. HSAs, you contribute, and it's a tax deduction on the 1040, how much you contribute up to like $6,000 into your HSA. So do the HSA, maximize as much as you can, use it for everything you need to, don't do anything different. The insurance itself will fall on the itemizing Schedule A section, but you're probably not going to get it, because you'd have to have more than, like in their case, if they're making $60,000, they'd have to have more than $6,000 before $1 kicks in. And
when you get those HSA statements and all that kind of stuff, I actually have 2 HSAs.
Well, there you go. He's covering.
So, no, I'm not. I was at one job.
Want to merge.
Yeah. See, can you? That's my question. Like, because I was at one job that had an HSA. Now I'm here and I have an HSA. Is there a way to put them together? Because it kind of gets complicated.
You should be able to put them together, or I would. Yeah. If there's money in the older one, I would use that one up, so zeroes it out. That way, then it's no longer active, basically, and then start using your new one. Yeah, because that would be very confusing. Yeah, that is confusing. And when you get those statements in, I mean, that's important stuff to keep. You will definitely keep that, yeah, because that's going to prove your insurance. And keep in mind, they've changed back when the Obamacare thing came in and all that. You know, you can't buy vitamins, you can't buy aspirins with your HSA. Basically, it has to be prescriptions and things like that. So just be smart and don't go use it to pay for your veterinarian bill.
Right, because they will find out. It is the IRS. They're all over us
Eventually,
anyway.
they will find you.
Absolutely. Websites, IRS, do they have great tools for people? You know, questions. I'm sure they've got a facts section on there and some tips for people.
I mean, I live on that site. I will be honest with you, because a lot of times that's where you're going to be able to read the laws, how the IRS is going to implement them, not so much what the Congress or Senate is telling us they're going to do, but how they're going to do it. So, but it's a wonderful irs.gov. It's a really easy website. You can make payments. You can set up offer and compromises. You can go through and get pre-approved kind of thing. You can set up a partial payment plan, a payment plan. There are all kinds of tools. And remember, if you haven't filed taxes, I've got people that are 10 years more that haven't filed taxes. Now's the time to start thinking. The offer and compromise, the fresh start programs are out there. They're great programs. You can be able to, you know, again, not everybody's going to get a $1 for every $100 they owe or whatever, you know. It's going to be individually set up, but I've got people that owe $200,000 and $300,000 that are paying $20,000. You know, there are some great programs, and sooner you get that cleaned up, sooner you can move on with your life and not worry about them levying or putting liens against paychecks, against your bank account. I mean, how many times people call me and say, the IRS just wiped out my bank account, I can't pay my rent. I guess they got your attention, you know, because that's the point of that, is because you're not paying it. If you were having a conversation with them and working with them, they will not be taking your money out. It's that simple. They just want to get your attention, and that they have the best tool in the world to do it. Take my money.
Seriously, wiping out the bank account. I mean, if that's not a red flag, I don't really know what
yeah, exactly.
That's crazy.
Right. It says U.S. Treasury, so you have a really good idea of who's taking your money and why. But the good thing is the bank has to hold it for 21 days. We can swoop in and try to make a deal with them, and a lot of times we can get a big chunk of that money back once we get you set up. So there's ways of doing that. That's
something I didn't know, because you can broker back and forth between.
We can do a lot that way. Yes.
Yeah, it seems like you'd be really good at that.
Communication is kind of important. You really do not want to ignore the IRS. I don't care if it's just a small debt or whatever. You don't want to ignore them.
Absolutely. And there were some issues with the IRS. I mean, obviously, since they're a little staffed.
There's a lot of issues.
Right.
Well, budget cuts have made it really hard for all of us. I will tell you, I mean, I set a whole day aside usually to try to get through to deal one or two issues. And I'm an enrolled agent, which means they have licensed me. So we have a separate line in most cases to be able to deal with things, and it still takes us 5 to 6 hours to get. I mean, I've waited on the phone line 2 hours minimum to even get started on, and normally they'll let us do 2 or 3 cases. That's even getting smaller. Sometimes they only allow us to do 1, and we have to call back, so then we have to wait 2 more hours. It is ridiculous, guys. I do suggest, you know, obviously if it's an emergency, you have to do it. Certified letters work. You know, Tax Advocate Office is an awesome office. Their funding is going down. It's harder and harder to get them to take a case in a timely manner, but that's not their fault. Just keep in mind, you know, obviously I know everyone's like, well, that's the worst thing in the world. The IRS doesn't have money. But it kind of is, because if you're having issues with the IRS and you can't reach somebody and their answer is a computer is generating these love letters that you keep getting, the computer is eventually going to issue levies and liens. I mean, seriously, you're not talking to a person, you're talking to a machine, and it doesn't have any emotions. It doesn't care.
Right.
I tried, but it doesn't care.
It'd be kind of weird if it did. When people call you, this is kind of a random question, but what's the #1 question you get from people who call you when it comes down to taxes?
Right. Well, either one of two things. If they're filing their own taxes, their biggest question is, have I taken all my tax deductions? Can you review it? Because we do a lot of reviewing. Second is, how can I save tax dollars? You know, what tax, there's got to be something out there. I can't owe this kind of money. And then a third is, if the IRS is on their tail, they're like, how do I get them off? You know, what am I going to need to do? I can't afford what they're asking, blah, blah, blah. So, and keep in mind, the IRS has their own code of like how much money you're making, right? Like a family of 4, basically $40,000 is what they consider a life living wage. So if you're making $60,000 or $80,000 and you're sitting there going, I'm barely making it, they're not going to start crying for you. I'm sorry, it's not going to work that way. So, you know, you need to have communication. You could explain where the money's going. Maybe you've got, you know, child support or something, multifamily, mixed family. These kind of things happen a lot more nowadays. But anyways, you know, so you just want to be able to open that conversation. The IRS needs to hear your story. Okay,
and we just got a question in. She couldn't stay in the line, but she's about to buy a house, obviously a huge investment there, and she's wondering if she can use her 401k funds for a down payment without being penalized.
$10,000. She can take $10,000 out of that and invest it into, if it's her first time home buying.
Okay.
So if this is not her first home, she cannot do it. If it is her first home, she could take $10,000 and she won't pay the penalty. She will pay taxes.
Right, and pulling out money anytime out of a 401k
not necessarily a great plan.
Right.
I mean, honestly, not
Yeah.
I mean, and if the case is you just need it really quick, and you know, maybe with a 401k you can take a loan out. They're pretty low interest loans, so you usually have a little better, and there's no taxes due in or out. So it might be a better option to just go loan, you know, get a loan against it and take it out, and that way you don't have to worry about a tax bill. But I probably would not take out money from a 401k, and definitely don't take money out to pay off your mortgage, that kind of stuff, guys. The world's worst program. I have 2 cases right now. One lady had $170,000 from a divorce, took it out of a 401k. Now she owes $57,000. She brought a house with all the money. She has no access to the money, and so it's a serious problem because she has a house that has no mortgage. That means we have equity.
Wow.
But, you know, so the IRS has put a lien and all this kind of stuff. You don't really want to play that game.
That's a messy game to play.
Very messy.
Absolutely. All right, well, we're going to take a short break. Give us a call, 737-7587. If you have any questions, we'll be here for the next 20 minutes or so. We'll be right back.